Hello and welcome to a new episode on What Does This Data Say? I am Ajay Prakash. Today's question is exit polls and the share bazaar. Who is really profiting? Every election season, India doesn't just vote, it speculates. As soon as the exit polls hits the screen, something curious happens on Dalal Street. The same night pollsters predict a political sweep, the share market begins to soar. Is that coincidence or coordination? Are exit polls simply political forecasts or are they becoming trading signals for the wealthy? Just before the 2024 Lok Sabha results, Union Home Minister Amit Shah told NDTV, and I quote, buy before June 4th. He said that whenever a stable government is formed, the market rallies. And he predicted a 400 plus seat NDA, a sweep, and a stable Modi government. That wasn't a broker talking. It came from India's second most powerful man mid election. Within hours, exit polls began flashing Ab ki bar 400 par. Investors took the cue. On the Monday after the exit poll, the Sensex jumped 3.4% in a single day. Retail investors, small traders, and salaried employees rushed in to buy before June 4th. Now, coming from Amit Shah, no one was surprised. Amit Shah's profession as a stockbroker is a significant aspect of his career. He started his career in the stock market and has since become a prominent figure in Indian politics. His stock market investments and portfolio have been a subject of interest for many, reflecting his strategic acumen and investment decisions. So when Amit Shah says it was not only the Union Home Minister, it was a well seasoned and experienced stockbroker as well. People believed in him. They bought the shares before the deadline of June 4th. When counting day arrived, reality struck. The BJP did not cross 400, not even close. It barely scraped into a simple majority. And the market, it crashed. The Sensex, inflated by confidence, tumbled nearly 6% in 2 days. Billions in paper wealth evaporated, small investors left holding losses. Just to understand the stock market crash phenomena, if the BSE Sensex index drops by 1% today, approximately 4.68 lakh crores, which is about USD 56.4 billion, is wiped out from the total market capitalization of all companies listed on the BSE. This calculation is based on the recent total market cap of all BSE listed companies, which was approximately 468.94 lakh crores, which is around $5.64 trillion as of November 12th, 2025. So all investors lose money, but the small retail investors get hit the hardest. A quick look at the other general elections. In 2014, the rally was justified by a landslide victory of the BJP. 2019's bounce endured because the verdict matched the hype. But 2024 proved the rule: when exit poll euphoria outpaces reality, the correction is brutal. Every election repeats the rhythm: exit poll, market spike, results, correction. For institutions, the hedge funds, it's not chaos, it's an opportunity. They buy early before the exit polls. Optimism spreads through TV panels and WhatsApp groups. Retail traders rush in chasing momentum Once the price inflates, the big players quietly sell just before the results are announced. It's not insider trading, it's sentiment manipulation. Public psychology turned into a tradable commodity. And when political leaders amplify that optimism, Dalal Street's herd instinct does not rest, and so does your own fear of missing out a great opportunity. Before we talk about Bihar 2025, let's rewind to 2004, the original exit poll shock. Exit polls back then predicted a comfortable NDA victory under Atal Bihari Vajpayee. On 22nd April 2004, the Sensex jumped over 1%, adding about 20,000 crore in value. The Dalal Street celebrated the promise of continuity. But when results arrived on May 17th, everything flipped. The UPA, led by Sonia Gandhi and Manmohan Singh, pulled off a surprise. The Sensex plunged 15.5% in one day, triggering two trading halts, the steepest election day crash in Indian history until 2024. It was optimism built on political prediction, destroyed by political reality. The 2004 crash became India's first major example of how exit poll euphoria can be weaponized for short term speculation. Now let's fast forward to today. Bihar votes are in and exit polls again predicting a resounding NDA victory. Pollsters across TV and digital platforms forecast a near sweep for the BJP JDU alliance. But not everyone's buying it. RJD leader Tejaswi Yadav rejected the polls outright. As reported by the New Indian Express, he said, Amit Shah writes, PMO sends, media runs. He insisted the India bloc would actually sweep Bihar. That statement reflects more than politics. It's growing skepticism that exit polls have become a narrative tool, not neutral forecasts. Now look at Dalal Street. Right after those exit polls, the Sensex climbed nearly 2.5% in the last 5 days, adding about 2,000 points, hovering around 84,765 at 11:55 a.m. on November 13th. No corporate earnings, no policy shifts, just one event, exit poll, predicting NDA victory. It's the same pattern. Markets love political certainty. Poll day optimism fuels the rally. But history warns that optimism can vanish the moment real votes are counted. So, who really profits when the Sensex jumps on exit poll euphoria? Not the small investors. They enter late and exit in panic. It's the large institutions, high net worth individuals, and algo funds who trade the mood, not the mandate. A political soundbite, a poll number, a catchy slogan, all can move billions in hours. It's a speculative theater where democracy itself becomes a derivative. Even analysts in the same article warned investors the market was overheated. But hype always drowns caution. When the Home Minister says buy before June 4th and every screen screams 400 par, who is reading the fine print? This is how narratives overpower numbers. Why sentiment analysis now matters as much as fundamentals. Exit polls once belonged to political science. Now they are instruments of financial psychology. A strong exit poll result creates inevitability. The government is coming back. That perception itself becomes tradable. Media amplifies it, investors interpret it, and the loop feeds itself. Should political leaders comment on stock trends in mid election? Should exit polls embargoes extend to market moving statements? Who regulates sentiment when it becomes a traded asset? Unregulated optimism risks turning democracy into a casino where every vote becomes a speculative bet. Let's connect the dots. 2004 exit polls show NDA win, Sensex up, UPA surprise, Sensex down by 15%. 2014 clear Modi wave, market rally, verdict matches, it was a bull run. 2019 repeat mandate, the rally sustained. 2024 exit poll euphoria, temporary boom, crash on results. 2025 Bihar exit polls predict NDA win, market already rising. A decade of evidence, the bigger the prediction, the sharper the swing. The question is not whether markets react to politics, they always have. The question is who knows the script before the curtain rises. Exit poll coverage starts resembling a stock advisory show, the line between journalism and influence blurs. If newsrooms can trigger trade, should accuracy be audited like financial data? There is still no explicit rule preventing poll related market commentary. SEBI can punish insider leaks, not orchestrated optimism. Maybe it's time political market signals are treated as sensitive information. Voters need protection not only from fake news but from financially weaponized narratives. Behind every market swing are real people. A teacher investing a saving because a minister said buy it. A retiree trusting the exit poll. When hype collapses, they lose. The wealthy diversify. The common investor bleeds. That's why manipulation of hope is more dangerous than manipulation of numbers. Here we are again. Exit polls promising a sweep, Sensex celebrating before a single vote is officially counted. Ask yourself, are exit polls serving democracy's transparency or portfolios of a privileged few? When politics, media, and markets move in sync, truth becomes secondary and timing becomes everything. Exit polls were meant to predict power, not produce profit. Yet, time and again, the real winners aren't those who win votes. They're the ones who trade on belief before it's tested. So, as Bihar votes, the Sensex climbs. Remember, optimism is the most profitable commodity in India, and every exit poll is a signal someone's already trading on. Thank you for watching. I'm Ajay Prakash.